Hello and welcome to the Weekend Investing Good, Bad, and Ugly weekly review of 24th November, week ending 24th November. From the weekly Weekend Investing Research Desk, we had some wonderful articles this week on support and resistance dynamics. We had one on key principles of success, building your own sectoral strategy, some very real challenges that 2024 can place in front of us. We studied gold in other currencies other than USD and INR and how it is breaking out in all other currencies. Uh, then we had some lessons from Mr. Jhunjhunwala's journey, some behavioral uh, lessons from what is your worst fear and how to overcome that. Another story on how the tail is wagging the dog. So the results that we see in a quarter, or any other news that comes out, actually gets influenced. Already the price is already influenced in the markets on that. There was a story on how this can be a decade of the commodities and how the commodity to equity ratio has been extremely low for the past many years. And seven lessons for a wealthy future. Very nice take on what to do to create a wealthy future. All this and more on the Weekend Investing app in blog format, in video format, and also comes through as a newsletter if you like reading a newsletter. Nifty this week absolutely flat. In fact, the last four sessions have the Nifty has not moved at all. But having said that, it is meaningful to note that it has not fallen also. A few days of FIA selling in that, but the index is holding pretty high. On the weekly, we are very near again to the all time high close. So the weekly chart is not uh, a weak chart at all. It's a strong chart, and it is likely that in the next few weeks we can challenge the previous all time high. Sectoral overview: real estate continues to run very hard. Real estate cycles, when they come, they run for long and they run very hard. 81.5% up on real estate index in just financial year 24, which we are in the eighth month of the year, and we are up 81.5% there. This week, 1.5% done. Metals up 1%. Pharma also doing quite well now, plus 1%. Energy, autos, and public sector enterprise up nearly zero point 0.9 to 0.8%. Others were nominally up. FMCG down 0.3%, IT down 0.4%, and PSU banks taking a hit this week at minus 1.7%, although for the financial 24 they are up a healthy 34%. The sectoral momentum table is there, where you can see IT stocks are suddenly picking up, autos are suddenly picking up, public sector enterprise stocks are going out of flavor, consumption stocks are picking up, PSU banks are going down, gold is coming up, and essentially pharma is up there, but not really in top momentum, but still in the top five or six there. So a good and real estate, of course, is all in all uh, time frames at number one. In terms of benchmarks, mid and small cap index moved up 0.4%, a marginal gain this week. Nifty moved up 0.3%. CNX 200 and CNX 500 moved up zero point 0.3 and 0.2%. Small caps eked out a gain at 0.1%. Nifty Next 50 was the biggest loser at minus 0.5%. Out of all of these indices, small cap 250 has done the best at 47.8% for the financial, and mid and small cap has come in at 41.3%. In terms of weekend investing strategies, MIATH2 up 0.9%, MI30 up 0.7%, HNI Wealth Builder 0.7%, NG50 at 0.4%, MI25 at 0.2%, and others down between 0 and 1.2%. So, not a very exceptional week to really talk about. MIMT all cap, our very popular and old strategy, completes 5 glorious years. We are having a special campaign for this strategy using code allcap25, and you can avail a 25% discount for a new subscription, and this will be valid on till Sunday only. It's an absolute momentum strategy above 1,000 crores of market cap, deploys capital in up to 20 stocks, rebalance frequency is weekly. So it's a review weekly, doesn't mean that it churns every week. It goes dynamically to cash. The recommended capital here is 5 lakhs to 30 lakhs, and the minimum capital requirement to start is 1.25 lakhs. Although we do recommend at least 2 lakhs to start with. Outlook is, of course, 4 to 5 years should be your outlook. Looking at it, this is the last 5 years journey for MIMT all cap investors. If they started at 100 rupees in 2018 November, today they are sitting at 400 rupees, of course, minus taxes and minus some transaction costs, which get taken care of by the dividends that one receives in these stocks. Other metrics, you can see absolute returns versus the index, the CAGR versus the index. The max drawdown is also particularly good. ROMAD ratio is pretty good. And the yearly uh, breakup tells you that not every year you will see outperformance, but there will be lumpy performance outcomes. So first year it did 2% versus 9, second year it did 45 versus 9, third year it did 111 versus 38, fourth year it was down -1 versus 7, and this year it is at 29 versus 12. So overall, extremely good, extremely robust outcome of this strategy, and this CAGR metrics over a longer period has been nearly 32% continuous CAGR versus 14, and 3 year rolling CAGR, if we see, it has been nearly 40% for the last many years. These are the some of the largest gainers and losers in this strategy. Alkyl Amine, Tata Elxsi, KPIT Tech, Adani stocks, Saregama. These have really been huge winners, and some of the losers have been again Adani, Total Gas, Universal Cables, Tanla, etc. So what you can see immediately is that the biggest winners are much larger than the biggest losers, and that's what the thesis for most momentum strategies is, that the winners in this strategy in 5 years has been only 51%, but each winner has been on an average a 63.5% gainer versus a 11.7% loser. So that basically creates the math why these strategies keep winning even with 51% of win loss ratio. So you can use this special anniversary offer till Sunday. You can use this code allcap25 to avail of a discount. And this is the end of the GBU for this week. I hope you have a great weekend. It's a long weekend. Please enjoy yourself and come back and connect with me in the markets on Tuesday now. Thank you. Bye.